Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. So today, yes, we have the daily market update. It's Tuesday, the 11th of August, and it's a pretty much nothing day. It's a consolidation day at highs. The big news of the day is, according to me, is from a little niche in the market, the weed market that is. Curaleaf decided to make a hostile takeover bid for Aurora Cannabis. This to me is big news for the space, okay? And I'd like to depart from the usual daily market update today because really nothing is happening, okay? We're just consolidating at highs and we're waiting on the inflation print tomorrow, okay? So the big news is inflation is coming tomorrow. Well, the inflation number, I'm not saying inflation is coming, okay? We will see if they beat or not. If inflation comes in cold, well, I think the market has very, very positive for the market, for gold, for all of our positions, and even for semis. Okay, so basically, it's a nothing day today, consolidating at highs, forming a flag, if you will. So it leaves us more to talk about the big news of the day, which is Curaleaf taking over Aurora Cannabis. Okay, so let's get to the news. Okay, Curaleaf launches a hostile bid. This is the key. Okay, a hostile bid for Aurora Cannabis. Okay. So they're offering shares and cash that values the proposal at around $4 US per share of Aurora. So under the proposed transaction, Aurora shareholders would receive 0.3463 Curaleaf shares plus 75 cents US for one Aurora share. Okay, this represents a 45% premium to the 30-day average price, volume-weighted average price of Aurora for the past 20 days. Which is about $2.75 US. Okay, so this to me is a big deal. Okay, let's go over to the charts and you'll see Curaleaf here is probably the best in class. Okay, here it is. This is the Canadian version. Okay, it's delayed quotes, but now it's trading for about $13.80 Canadian. And if you look at the perspective, okay, yes, it's down from its highs. Okay, but it's still well off the lows of $3. It's up to $13.80. Okay, so in a very, very crappy space that is weed, okay, this is probably the one that is making money the most. Okay, look, you can see the past earnings they beat. Okay, on a non-GAAP basis, they got 7 cents a share, standardized 6.4. I think they're losing money on a GAAP basis, but better than their competitors. Okay, so these guys are actually making money in a very, very tough environment. Okay, and they even increased their revenues. So this is probably the best in class, if you will, the leader. And this leader today decided to consolidate in the space that is hated, not looked at. Okay, and which to me is a very, very brilliant move. Okay, if you look at Aurora Cannabis, ACB, the takeover target. Okay, this stock has been trading at lows. It's split a lot. The highs pre-split was $1,600. Okay, I don't remember what it was. A pre-split price, but post-split it's $1,600. So look at its heavy dilution, dying. Okay, these guys do not make money. Okay, this is the first big move today. It's up 20% solely on the offer of Aurora. Of Curaleaf. Okay, so it's trading at $5 US. Canadian. This is a Canadian price. Okay, of Aurora Cannabis. So it's trading at $5. Okay, and it's valued at $4 US. Okay, so this is a brilliant move by Curaleaf. They're trying to take over their competitors at the lowest point in the market. They're really, really paying a cheap price. I think this is very good. Okay, this reminds me of the junior gold mining space where when they were hated and the price of gold was low, the smart juniors were the ones that were consolidating their land packages, the ones that were buying their competitors. Okay, they weren't like spending money on drilling for no reason because it would provide no benefit. Okay, if you drill and the market doesn't recognize your drill results, it's all for naught. You spend money for nothing. So better to consolidate, buy your competitors, increase your assets in a down market, and this is exactly what Curaleaf is doing. Okay, so if we look at like Aurora Cannabis, let's say, let's go to Finviz and look at Aurora Cannabis. Okay, you can see just as an example of how bad this industry is. Okay, its gross margin is 10% gross. Okay, but it's losing money in operations, and its profit is abysmal. Okay, a dismal minus 38% return. Okay, however, what you know that this company now is in survival mode, but at least here, if you look at the quick ratio and the current ratio, it tells you how much cash they have in a short-term basis. So short-term wise, they will survive. So they're in survival mode and they don't have a lot of debt. So they could survive, but the bleeding is on. Okay, they might have to issue shares down the road to like survive. Okay, but they're doing everything they can to survive. Okay, and it's the same story for almost all the wheat stocks. Okay, so they're in survival mode. These guys are ripe to be taking over, and Curaleaf is taking advantage. Okay, so if we go to here, I put up a graph for you guys through Seeking Alpha. Okay, I'm comparing Curaleaf here to its peers. It's a comparison of weed companies. Okay, I put Curaleaf to the left, Canopy Growth, Aurora Cannabis, and Tilray. Let's talk about these, let's say the big four, if you will. Okay, so if you look at their performance, okay, the one in orange here, the chart here, is Curaleaf. Okay, it's basically up 13%. Okay, for the year, while everybody else, okay, ACB, Canopy Growth, Tilray, they're all negative. Look at it. You can see the numbers here. Canopy Growth is minus 39%, ACB minus 44%, Tilray. So in a crappy space where everybody's dying, Curaleaf is the shining bright spot that's actually up because it's making money. Okay, on a non-GAAP basis, of course. Okay, so if we continue lower, you will see why this is a better company than most. Okay, so forget valuation, growth. Okay, you can see that the revenue is not doing so well. You have good growth on revenue on ACB, but it's coming from a very, very low base. These guys are much higher. Okay, so it doesn't show much. Okay, let's go to profitability here. You can see here the gross margins of Curaleaf are doing well. ACB is also doing well, the gross margin, but then it gets destroyed on the EBIT margin and the EBITDA margin. Okay, whereas that means after earnings before interest, tax, and depreciation, okay, after everything has been taken out, ACB is negative 10%, while look, Curaleaf is still positive after these results, okay, and its competitors, even Canopy Growth, is negative, but getting better. Canopy Growth is getting better. We do have a position in Canopy Growth, okay, and Tilray is good, okay, but not as good as Curaleaf. You can see the net income margin, they're losing. This is on a GAAP basis, but in reality, they're making money on a non-GAAP basis. Okay, but look how dismal a Canopy Growth is on a net income. They're not making any net income. Net income margin is minus. It's like they're losing on they're losing money on the amount of shares to the equivalent of minus 80%. But these guys are just losing 2%. This is all GAAP, but on a non-GAAP basis, it's much better. Okay, but this is just for comparison purposes. On a relative basis, you can see how much better Curaleaf is than the rest. Okay, so just to show you guys that, you know, on the income statement, you can tell they're doing much better, earning revenues of 1.34 billion, where everybody else is. Tilray is coming out 1 billion, but you can see how ACB, how terrible it is. It's not really surviving. Okay, earnings per share diluted, minus 20 cents for Curaleaf, better than all its competitors, just to show you how much better they are. Okay, that's all for comparison purposes, and that's why you see the stock price doing better in a very, very shitty space, very, very crappy space. So Curaleaf is doing the exact perfect strategy when it comes to the situation that they are in. Okay, they are in a terrible market and they're trying to consolidate while the prices are still low. Okay, they don't want to wait for their competitors to go bankrupt. They probably won't anytime soon because they have a lot of cash. They'd probably dilute first before going bankrupt. So they have a lot of cash, then they won't go bankrupt anytime soon. So it's a good idea to buy them out. And the good thing about it is that Curaleaf is doing it, what do we say here? It's a cash and share deal, a little bit of cash, but it's the shares. They're using their own shares to buy them out, which is better, okay, in this case. So they're trying to conserve cash using shares to buy out a competitor in a very, very terrible space where they are doing relatively better. Okay, so I think this is a very good strategy on their part. Okay, consolidation at lows when the market will not recognize anything else. Concentrate on continuing to create profits. Okay, we have Canopy Growth, and Canopy Growth is starting to turn the corner a little bit. Okay, but these guys have turned the corner. Okay, Curaleaf has turned the corner, and you would say this is best in breed in the shittiest industry on the planet. at this point, but it is turning around. And it's that margin that we look at, that turnaround point is where you get the most torque for turnaround plays. Okay, when you go from loss making to making money, that's when the big money comes in, for lack of a better word. That's where the torque comes in. So your share price should go much, much higher when you just turn the corner. Okay, so we're looking at canopy growth. We're looking for canopy growth to do that. Okay, it's still stuck at the lows, just like Aurora Cannabis. Okay, these were our catalysts that we were looking for beforehand. Okay, but that's not important right now. What's important is to show you guys that when things turn around, you can have explosive growth. It happened for Curaleaf, as you can see, when they started getting profitable. Here, they were consolidating at lows and then ripping much higher. When they look, earnings, you can see here the earnings tabs are negative, started losing. But the moment they started outperforming, trying to go from less negative, not losing as much, and then to finally getting positive, here, positive 7 cents per share, then your stock price will explode. They went from $3 to 13. That's pretty good. Okay, that's like 4 or 5x. Okay, even higher. They went to 20 at one point. So that's what happens when you have a huge torque, when you go from a loss to a change of expectations and the market recognizing it. Okay, so that's what I want to talk about today, guys. Slow day overall. So I think this is a very important move in the weed space that nobody's covering. And it's going to take time. These things take years, I think. This play that we did on canopy growth is going to take years, 3 to 10 years. Okay, but you can see how quickly the turnaround can come in Curaleaf. Okay, it comes very, very quickly when you're losing to making money again. Okay, so that's it. That's all I want to say, guys. Let's look forward to a good inflation number tomorrow. Okay, so that the SPY and ARG and our long trades do well. Okay, I think inflation comes in muted. I don't know, because oil has gone up in the past month. We saw oil here the past month going higher. Okay, there's U.S. oil, so that might not be as good as we think. We don't know. Maybe I'll be happy if inflation just meets, it goes in line. Okay, but you never know. You never know what happens, because inflation, remember last month we saw that inflation wasn't going down just because of oil. It went down, core inflation also went down, which is X oil. Okay, so let's hope that trend continues. All right, so let's see what happens tomorrow, guys. Later.